Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra. Hi, Sonal. Let's kickstart the show. We've got a lot lined up for you. These are the top stories at 1:30 p.m. Markets slightly off the session's low as stocks seesaw after a recent rally. Metals, IT lead the gains while capital goods and power slips. Midcaps fare a tad better.
A weak quarter in guidance along with governance concerns hurt Aurobindo Pharma while margin pressure haunts Alchem.
Zee Entertainment and Sun TV take a beating as weakness in advertising revenue weighs. Zee Entertainment's management tells CNBC-TV18 they're cautiously optimistic on ad revenue even as margins improve.
Strong premium collections and new business growth boost LIC's earnings. The stock posts the biggest gain since listing intraday.
Manappuram Finance gains despite weakness in the gold business as a favorable base effect lifts earnings year on year, while Info Edge rallies on a strong earnings and guidance.
Okay, all right. Those are the top headlines that we are tracking on Midcap Radar today. The market's absolutely flat. There is some breather for our markets that we are seeing. The Nifty is up 8 points. It has recovered from the lows, but nevertheless, it is in that consolidated range. We have the mid-cap side of things, which are also flat in line with the benchmarks, and Bank Nifty again absolutely flat. So it's really a stock-specific move that we are seeing. And on the back of results, a lot of stocks in the broader markets also that are moving around. But in the Nifty pack, if we speak right now, it's Hindalco, which is doing really well. That stock is the top gainer, up 5.5%. And apart from that, if we look on the flip side, it's ITC, which is at the day's low. So Reema, after that strong rally that we saw last week, we are taking some breather, but that's, I think, par for the course because there are some levels that Nifty is consolidating at right now.
Indeed. So it's holding above 18,350 as we speak. We're still very, very close to our all-time high levels, just about 250 points away from that. But that final hurdle, that final obstacle, is just, the markets are taking some time before we can conquer that. But, Asian markets continue to rally, right?
Yes.
Hang Seng was up 7.2% last week. And
today,
over and above that, today it's rallied about 1.8%.
In the morning, it was up 3.5%. So it has actually...
It's actually slipped. But the point is that, the Asian markets appear to be playing a catch-up. India was an outperformer.
Yes.
Now it's consolidating, still at all those elevated levels. And bit by bit, it's adding on. Last week as well, the Nifty was up 1.2%. So it's not that we're giving up ground, but it's just that in terms of gains, the acceleration, it now appears that emerging markets are seeing a bit of a catch-up rally. But we've got a management waiting by, so let's introduce Make Money Fine Chem on our show. They have reported a strong set of Q2 earnings with a strong revenue growth and a profit jump on a year-on-year basis. The company came out with numbers in October, but didn't get a chance to chat with the management then. Maulik Patel, the CMD of Make Money Fine Chem, is now joining in. Maulik, afternoon. This is Reema here. A near 65% top-line growth. How much of it came in from the new projects which were commissioned in July as well as between the July to September period? And what would be the capacity utilization of these new projects?
In Q2, the growth is mainly because of the value. It's value-driven, purely value-driven, because all the products, the demand was high because of the European situation, the energy situation. The chloroalkali demand has substantially gone up. That was the major reason. The new projects which we have commissioned, that is on the customer approval. As we mentioned in our last call also, that the Q3 and onwards we will pick up, and by end of Q4 the optimum level of the production will reach. And we are so volume is increasing, but the optimum level will reach by end of Q4 for epichlorohydrin as well as for the CPVC.
Okay, so you are saying that from Q3, these new projects will start contributing. Have they already been commissioned in the sense that you're saying that you are expecting orders from your customers? Right now, what is the capacity utilization for these two new projects, that is epichlorohydrin and CPVC? And by the end of this, when you mean optimum, what would that be? And at those peak utilization levels, what is the revenue contribution expected in this year itself?
So currently, operating level is very low because around 20 to 25%, 25 to 30% level. CPVC is little on the higher side, around 40 to 50% level, 40% level. But eventually, by end of Q3, we will reach to around 50-60% in the CPVC, and the ECH will reach to around 30 to 35%. And I think by end of Q4, which we are saying optimum level, which means around we will cross both the plant by 70% capacity up running.
Okay. What will this mean for FY23 revenues? I think your previous guidance was 50% growth. You're tracking ahead of it right now. Could you tell us what would revenues look like?
Yeah, see, in the currently in the entire product portfolio, some of the the prices in terms of the raw material prices has gone down. Like the CPVC, the raw material price of PVC has gone down because of the CPVC also price has come down. The epichlorohydrin, because of the it is major usage is in the epoxy resin. The demand has gone down globally in US and Europe. So there is an effect, and at the same time, the raw material price has also come down. So definitely, yeah, there is an impact in terms of in terms of the revenue. The volume growth will pick up and the revenue. So we are still hoping that we will reach our target of around 50% growth in current financial year, because of the volume will pick up by end of quarter 4.
Okay, so it'll be volume driven, but of course, because raw material prices are coming down, that will have some impact on revenue. So 50% growth is what will be the target for FY23. What about Europe? Because you've mentioned Europe a lot in the last 2 answers that you gave us, that that demand for Europe has been going down. Is it because of new customers, or there's a shift in demand? And what does it mean for pricing and the industry as a whole? That trend that we've seen in the chlor-alkali segment, will it continue, or you expect that this is the peak now?
So quarter 2, we expect that the quarter 2 was the peak, and because of that price, which is never expected in any of the downstream chemical usage. So I think because of this price is not able to maintain for a very long term, so that the demand has started impacting. So in a way, the downstream chemical, which is in Europe, the demand eventually will shift to somewhere else if this situation will continue. Because this prices which has gone in quarter 2, which is can't sustain on a long-term basis.
Can you talk about your other segments like textile, paper? You know, many of the companies we spoke to in the textile segment indicated a lot of pressure in their earnings. How is it faring for you, textiles and paper?
See, textiles in the last quarter also the same, in the raw material of cotton has gone down and it's continuously going down. So the textile was not able to restart their production. But I believe now cotton has come to a level where everybody is starting their production level. And I think now onwards we can see the demand will pick up again, So in the many of the raw materials in the chemicals has reached to a kind of bottom level. Then the many of the demand which was not there in last 3-4 months, which is going to start picking up in next couple of months.
Okay. So you expect demand to pick up in next couple of months. Let's talk about exports then, because it is a small part of your overall revenues, 5 to 7%. But you plan to scale it up, considering that you are talking about increased demand from Europe. Are there any other markets that you will be looking at tapping?
See, currently the situation is majority of our product is based on the domestic base. So if you see the CPVC, the world 50% demand is in India. So our first target to meet the demand in India. Yes, there is an opportunity right now in the epichlorohydrin for the export. So that we are exploring right now. I think we will do the export in the epichlorohydrin in coming times.
How much can that increase exports to, from 5 to 7% to what levels? Maybe 10-12%?
Yeah, so there is a possibility that it may go up more than 10% in the full year basis. Yeah.
Okay. All right, Maulik, it is a pleasure speaking with you. Thanks a lot for joining us, taking us through what the plans are for Meghmani Fine Chem. So they're sticking to their 50% plus growth guidance for this year. And chlor-alkali prices, they think quarter 2 has hit a peak because it was impacting demand. So they expect those prices to come down now. Do one thing, slip into a short break now. We'll come back with more updates on stocks and get in one more management as well. Stay tuned. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18, and we have been talking about how markets are faring today, absolutely flat again, and earnings, they continue to flow. Bank Nifty absolutely flat. We had Sensex, which is facing some bit of pressure, but that is nothing to complain about as well. But in the broader markets, we have LIC, which is surging in trade on the back of strong quarter 2 numbers. Surbhi is here with the earnings fine print. Surbhi?
LIC has posted a really strong growth in their premium, in their net premium, and in the value of new business. Their net premium has grown by 26% on a year-on-year basis, and their solvency has also improved on a year-on-year basis, now standing at 1.88. Their PAT has inflated 10 times, but this is just because of changes in the accounting policies regarding the investment income. the annualized premium equivalent, the APE, has grown by over 45% sequentially, and the value of new business has grown by 63% sequentially, leading to a 160 basis points of VNB margin expansion, and now is at 15.2%. The VNB margins were driven by better margins on the group business. Their embedded value has seen just a growth of 1% on a year-on-year basis, which is a point of a concern. Overall, really good numbers from LIC, but only the slower growth of the embedded value is a little bit of a worry.
Thank you very much for that big winner. I think this is one of the biggest single-day gains for LIC since its listing. That said, the stock is still much lower than its issue price. Healthcare Global Enterprises is a stock on our radar. It's reported a 20% jump in revenues, but profits have come under pressure. Dr. B.S. Ajay Kumar, Chairman and CEO at Healthcare Global Enterprises, is now joining us on the show. Afternoon, Doctor, and thank you very much for joining in. Your RPOP has risen by 1.5% on a year-on-year basis. RPOP is average revenue per operating bed. Could you tell us, how much of it is on account of high-end surgeries? What's the growth rate expected from here on, and the general demand?
Yeah, our RPOP is for the overall RPOP is including the mature centers and non-mature centers. When you look at some of the RPOP for the mature centers, they are much higher. And some of the centers who are not mature are becoming mature. That is why RPOP is at 39 compared to 36,000. And obviously, we expect this to grow. And one of the things that have happened is when you have more surgeries, obviously the RPOP will come down. As going forward, we expect more radiation, medical oncology numbers followed by surgery. So in view of this, we expect an improvement in the RPOP further.
If you can quantify that for us, it's around 37,000 rupees right now. When you say improvement, you also have new hospitals, Kolkata and Mumbai. What number are you looking at here in that case? Because I do understand Tier 1 has higher RPOP of around 60,000 rupees. Will it go towards, say, the 40,000 mark because of that?
Yeah, definitely. Particularly centers in Bangalore, Mumbai, Calcutta are expected RPOP will go up and Ahmedabad will go up significantly. Bangalore, of course, is reaching a level where the growth may be only 10 to 12%, but others, so Mumbai is expected to grow significantly, so is Calcutta.
Again, if you can quantify that for us, it's 1.3% in this quarter. By end of this year, what number are you looking at? If you can give us a broad range.
Yeah, we don't normally give it, but we expect at least 5 to 8% growth, maybe even more as Calcutta and Mumbai pick up. Those are the ones which will add to the RPOP.
Okay. So, we've always asked you about medical tourism. What was the contribution this quarter? And if you could share your thoughts on how it's expected to progress over the next 2 or 3 quarters?
Our medical tourism is going well. For example, our Bangalore center contribution is approximately anywhere between 18 to 20% of the revenue, and it is doing extremely well. So also is our Calcutta center picking up based on the Bangladesh, and where we had some issues for various other reasons was Mumbai, but we are beginning to see that pick up very well in our Kolaba center in South Mumbai. So we expect overall, when you look at the entire HCG revenue, what it is in the 5%, we expect it to grow up to about 7 to 8% in the coming years. Certainly, it is now reaching way ahead of the pre-COVID period.
Okay. So I wanted to speak to you about Milan now, because this time around that saw a decline in revenues both on a YOY and on a quarter-on-quarter basis. What is the outlook here in the first half? What kind of revenues are you tracking in this particular segment or your hospital? And what is the outlook going forward here?
We expect Milan to grow about, close to 15 to 18% annually. We also made a submission to the SEBI that we are in talks for a possible merger with ONGC. So the combination of these two coming together, Milan being an IVF, ONGC being a mother and child, we think will be a powerful combination for way Milan is looking forward. So with this, we expect growth to be significant in the region of about 20%.
Sir, if you can repeat that, I think we couldn't hear that part. When you say talking about merger of Milan with?
No, we announced that we are in discussion for possible merger of Milan with ONGC, which is a mother and child. And we will be, if that happens, we expect an additional growth in revenue for both Milan as well as 201.
And what is the timeline of this merger that you anticipate?
Yeah, the matter is in discussion. We'll, of course, once the, you know very well how the SHAs and all have to be done. We are in the middle of that. We expect that to happen very shortly, hopefully in this quarter.
So you're also planning some cost optimization initiatives as advised by your partner at consulting, which will help drive a margin improvement of 100 to 150 basis points in FY24. Is that correct? Could you give us an indication of where you are looking to bring down costs, and what else? What else has been the advice by the consulting firm?
Yeah, we are taking two fronts. One is in the cost optimization. We are in this looking at possible improvement in the margin, as you said, 100 to 150 basis point. Not only that, long term, this will add definite benefit for us in terms of operational excellence. So things are in the middle. We expect this to be completed by end of the last quarter.
Okay.
Apart from that, we are also working with another group on the digitization. Digital health now is becoming big, and we are taking very active role. We have invested significantly in this. And I think this will also start adding value when you look at the number of hits we are getting, number of things what we are becoming well known. I think this will also give us the fruit in the last quarter of this year.
Okay.
So by beginning of next year, all of this would have given us the additive value.
All right. So that is the outlook as far as margins and cost-saving initiatives are concerned. Last question before we let you go. In 2 to 3 years, with a lot of these new hospitals, your new hospitals reaching the break-even point, and a lot more that is happening in your company, what is the occupancy that you are planning? Will it be around that 80% mark, or you can do better than that?
No, in oncology, 80% is not achievable because a lot of it is outpatient therapy. It is not like a multi-speciality hospital. We'll be very satisfied to reach around 70%. Right now, we are about 65% or so. We expect overall, as the new centers also grow up, 70% is nearly completed as near full occupancy.
Okay. All right, sir, Mr. Kumar, thanks a lot for joining us and taking us through what the plans are. So that's the word coming in from Healthcare Global. The stock is up 1.5%, and decent commentary coming in from the management as well. Let's slip into a short break now. We'll put focus on Godfrey Phillips and Fortis Healthcare. Stay tuned.
Welcome back. In our special segment, Midcap Spotlight, Mangalam will be joining in, and he's going to put the spotlight on Godfrey Phillips, which is surging in trade. Mangalam?
Well, Godfrey Phillips is smoking hot in today's trading session, to use that pun. In fact, not just today. This month itself, it's up almost 20-21% at a time where the mid-cap index has actually underperformed the frontline indices. And in today's trading session, with the move that we've seen today, what it's done is it's equaled its move with ITC this year. For most part, until the last month, it was an underperformer in the tobacco space. And now, for this year itself, both ITC and Godfrey Phillips are sitting with 60% gains. And what is today's move attributed to? Strong Q2 results coming in over the weekend for the company. In fact, revenues have grown up at around 58-odd%. The EBITDA has grown at around 63%, and as a result of which, the net profit on a year-on-year basis has jumped by 70%. There's been a strong growth both quarter-on-quarter as well as year-on-year for the company. The key segment for the company is the tobacco business, which saw a 58% jump in the revenues and 70% jump in the EBIT, telling you that there was margin expansion out there as well. And over and above that, the next quarter looks good for them, not only because of the performance of the company, but also there will be an exceptional gain coming in on account of the chewing tobacco business that they sold for 80 crores during the previous quarter. And this is basically in line with the company's strategy of getting out of non-core businesses. And going forward, strengthening their partnership with Philip Morris will be one of the big triggers for them. Building on existing cigarettes exports market to enhance their own brand sales is something we'll be watching out for as well. Currently, they get about 10 to 12% revenues coming in from exports, while 68% comes in from the tobacco business itself. And finally, they do have a retail business as well. 24/7 is the name of the company. They want to, capitalize on that with, innovating or adding more stores in their retail vertical. So all those factors put together may perhaps lead growth for this company going forward. So this is something that we'll have to watch out for. But the only problem with Godfrey Phillips is that every now and then we do get some news coming in from promoters or any sort of conflicts out there. Let's see whether the company can actually put these behind them.
Right, Mangalam, that is about Godfrey Phillips. But Fortis is the other one which is surging in trade. Ekta is here with those details. Ekta.
Thanks for that. Well, yes, very good performance, which is really coming for the hospital company Fortis this quarter, and that's reflecting really in the stock price. Revenue was up around 10-odd%, margin 17% versus 19.5-odd% year-on-year, and a profit of over 200-odd crores, though it was aided by an exceptional income this quarter. But on a Q-on-Q basis as well, the revenue was up 8%, margins were maintained at 17%. Hospital business did well. Occupancies moved up to 70% versus 65% last quarter. International patient revenue was up 164% year-on-year. International patient revenue is now 8.5% of sales versus 7.5% last quarter. And the average revenue per occupied bed was up 5% year-on-year as well. The diagnostic business did see an improved performance Q-on-Q, so 351 crores versus 332 crores Q-on-Q, and margins of around 20.7%. Nomura has a buy on Fortis with a target price of 319 rupees. According to them, the revenue was largely in line with Q2.
Ekta, thank you very much for that. Before we wrap the show, here is a quick reminder that Ramesh Damani is back with us today on Wizards of the Street. Catch the market veteran's journey, inspiration behind his success in our very special show at 3:30 p.m. only on CNBC-TV18.